Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Thursday evening, the 30th of July, 2020. All right, as we look at the markets, you were down in some, up in the others, but late in the day, we had the earnings come out. They came out in Apple, Facebook came out, Alphabet came out. There was another big one too, I forget. There's so many that were coming out. And they were stellar. So these tech companies, these are blowout numbers. Apple's going to, in fact, do a 4-for-1 split. But these numbers were all phenomenal. I talk about that before we get too far. I want to show you something if I can get this to come up for it. Here it is. Just how this is what I used in my afternoon SPDR video. So I tell people what's coming out in the morning, and then one of the things I do is I go through everything and I talk about the earnings, Apple, Ford, Amazon. I went into even more than this, and I give you an idea of what's happened so that you get to look at all that's there. And then in the morning, when I do my morning futures video, I update this again, and you really get a handful of information. People tell me they love it because it's quick, they get right what they need. I record the morning one at 5:40 a.m. typically. My afternoon SPDR ETF video for the subscribers, not these. These are lightweight. The other ones are where the heavyweight is. I do those about 4 in the afternoon Central Time, so you get a full package all the way through. Want to remind you this Friday, we're going to finish off tomorrow when we do some of the weekly charts, but my big weekly program will be over the weekend, where I'm going to do for the subscribers only again, all the weekly charts on 35 different SPDRs and ETFs and on 40 different futures markets. A week from this Sunday will be the first webinar. That's what I've determined. We're going to start practicing it now, how you register. Again, there will be no charge, at least that's our goal, no charge for paid subscribers to my research. There will absolutely be a charge at the door, as they call it, to get in and participate, ask your questions the other way, which is the non-subscribers, and we'll also post on our website at an even higher price. And yes, we get a lot of followers on all this. All right. So let's go to the charts and let them do the talking. First off, when you look at the chart, throw out what you think. Take the name off the chart, for Christ's sake, sometimes. That's what I teach in my charting course. Is this a trend or is this sideways action? What do you think it is? It's sideways. That's what the market is right there. Now, the smaller trend today kicked in bullish again. Why? Out of this, if you tell me that you can tell that that's a trend, very good on your part. I can't. So I wrote a study called a swing line to tell me, am I trending? And the study has nothing to do. I can't change what it does. There's 5 rules that make up the swing line. And yes, they're on live chart data, they will swing there for you and show you just what they're doing. They'll flip back and forth just as it should be doing it. But a swing line defines trend and risk. If you're in an uptrend, you have a pattern of higher lows and higher highs. If you're in a downtrend, lower highs, lower lows. No trend will in some manner have a higher high and a lower low. I don't know which one of the two is made first, but it's not got a sequence of them. I filter this with key moving averages. One of them is the 18-day average of closes. I call that my line in the sand. If the market is over it or trading over it, the bias is up. Under it, the bias is down in relation to what the swing line is doing. So if the pros were to step in here and want to be a buyer of this market, I wouldn't want to see the current, if you will, swing line projection taken out. Now, this is also an outside day up. I'm going to come back. Outside days up should not, in my opinion, see the low of that day taken out for the next 2 trade sessions. If you're using a 15-minute chart, the next 15-minute time frames. I mean, you can apply it to whatever you want to apply it to. If it is, it's a trap, a bullish trap, because the market's just trying to go up, catches those people, and there's a bit of pain for them as the market tries the other way. So I expect to see buying in this market, and I think today's low at 105.60 is going to be a key number they don't want to take out. upside target, not very big. We're still very much in this sideways action, so 109.60 is all that I'm looking for. Not a big play, but certainly $2 or so in the market. Nothing wrong with that. The risk factor, about $1.60. That's how I view it. When I take a look at the slow stochastic, it flattened out and it's starting to turn up. So what do I have with the market? I have a market that's got the bias up since the settlement today was over the 18-day average of closes, and even though it's not open, at least that we know, the support's that 18-day average, and momentum is turning up on you. When we come to SMH, I want to take you back here. Here is a market that turned yesterday to the upside. Now, it's overbought. The resistance to me is going to be the upper Bollinger Band, and again, that's what it went to today. There's a reason it didn't punch through it and just run. If you don't believe in these numbers, terrific. If you don't believe on the 5% concept on the Bollinger Band, that 5% of the time you'll stay over it, go back and do your own math. Go on the internet, read the formula, prove it's wrong quantitatively. Don't tell me what you think. And this algorithm will adjust for the market. But that's your resistance point. Trend up. Resistance point, we're at it, and you're overbought. When I come to XLI, the market's drifting. It does have an upside bias because you've got higher lows, higher highs. The resistance, take a look at the 200-day average. This has been your resistance point, and what do you keep going up to and fighting there? You have the embedded reading. On the hierarchy of 1 through 5 indicators, and that's what I use on this at least, I think the main indicator is this. When the red line turns under 80, I don't want to be bullish. Until that occurs, I have a definitive bias, fundamental momentum pattern, and trend pattern all pointing to the upside, and it tells me the pros are buying the market. If they can clear the 200-day average, then maybe you can get up to the 74.35 level, which is the upper Bollinger Band. That'll be another resistance point. You're in a pipe, P-I-P-E, in XLE. When you narrow in these Bollinger Bands and crunch them and you just start going sideways in them, I call it a pipe. Now, for the moment, the trend is down. You have lower highs. You're under the 18-day average, first time. You stopped at the 100-day for your support. If you can get further momentum, because momentum is pointing down, if that can lead prices further, 34.80 could be one of the numbers. What's weighing on this market? COVID-19. As these cases keep escalating, be careful. I know in Illinois, we are this close to full restrictions coming back on. We thought we were doing better. We're not. Now it's getting bad. Are you looking at the numbers in California, Florida, Arizona? I can go on, but look at how many states are putting restrictions back on. Michigan, Indiana, got to wear masks again. It's getting worse, not better. I know that we've got all these drugs out there that they hope can solve this, but until they can solve it, what do you do? And one of the things that it bothers me is that as much as I believe in this science, normally you get a vaccine and it goes through years of testing. They want to do it right away, throw it at the public, and then wait and see maybe 6 months down the road or a year, what are the other side effects that happen? I'm scared of that, but you'll think I'm scared of everything because I don't want to fly on an airplane just yet. I get it. QQQ. Sideways action, trying to be bullish again. So the pattern today turned bullish. Higher lows, higher highs, settlement over the 18-day average. You have an outside day up. To me, I like the idea of being bullish right here, right now, with a caveat. You can't take out today's low. Another caveat. You're in sideways action. I would expect pretty stiff resistance at 266.30. Okay, so be ready for that. That's where I think you're going to see it at the upper band. EFA, the emerging markets, you stepped out of your trend, and I expected that. You're in a pipe. You're developing it right through here. Look at how narrow this all got. This was a classic pipe here. You widened it a little bit, and I mentioned that, and I didn't like what I saw. You lost the momentum. You've got a mess of a chart right now. I don't see anything on this chart. In gold, this is the first time you've stepped pretty far away from that upper Bollinger Band. Now, momentum It's still fully embedded. I don't see it losing that tomorrow, but you can see how it's drifting off a little bit. We'll see if the market can pick itself up with everything else tomorrow. It is still very much in the bull camp. You broke enough in the gold miners where you lost the embedded reading. Game over. So I think the pros bought it today. I think their risk factor was about 50 cents or so, and I think they went to the sidelines late in the day when they realized they lost the embedded reading. Can I prove that? No. Do I believe it? Yes, for the reasons that I tell you day in and day out. Whether they're using my slow stochastic or some other oscillator that they believe in, most of us that have done this a really long time believe that momentum leads price most of the time. Keep that in the back of your mind. So you want to get that balanced in whatever trade ideas you have. TLT, still very bullish. Higher lows, higher highs, running the upper Bollinger Band. You laid a bear trap in this market. Here's why it's a bear trap. You had an outside day down yesterday. I always say to you, if you take out the high of an outside day down within the next 2 trading sessions, I look for the market to make a run to the closest of above the market. The Bollinger Band or one of the key moving averages. Well, all the moving averages are under the market, so it'd only be the Bollinger Band. You tell me what that did. FXE, Gorilla Glue, you've just locked in. Now, the danger here is that, the dollar index is made up of a basket of currencies, and this is the heaviest weighted of them. So it's always dangerous to be long this currency, short the dollar. You're better off mixing your plays up because you're getting the benefit of the euro anyways when you're short a dollar. Things you got to think out, and your typical broker doesn't even understand this. But away you go to the upside, and this market's still looking to me like the dollar in a lot of trouble. You put it together, you have a game plan. As I said, this is how I start you off with everything. But for those of you that love trading these spider ETFs, at approximately 4 o'clock each afternoon, Monday through Friday, I go through the daily charts again, and you're seeing everything. The writings I put in, giving you an idea what's going to be there for Monday morning when the markets reopen. I'm going to review for you the daily charts, and one of the new things that I've thrown into this subscription is over the weekend. Now I'm trying to do them just Saturdays. I want a policy where I can get you a set time. I'm going to do another video of only weekly charts covering all 35 of the markets that I'm covering in this particular video. I'm going to have 40 charts in the end. I keep adding. I just added this week BETZ, the betting ETF. I cover all this, and we have to add to this BETZ, but I'm covering all these. Hit pause if you want to see the different ones, and we'll keep adding to them. But it's the really popular ones. And the idea is to give you trading ideas. Let's assume you were sitting at my side and talking to me. I've talked to you like you were right next to me. And that's the idea. It's not expensive. It's more than a cup of Starbucks. If you buy a grande, not that much more. And you get 30 days of this. Come on, do us all a favor, give it a try. I'm also now going to include for the paid subscribers, free, my webinars. They're going to be able to come in. The first one's going to be next Sunday, not this coming Sunday, a week from this Sunday. The invites will go out. Obviously, there'll be a first sign up for my paid subscribers and then a general invite. On the general invite, those people will pay a fee to get into the front door. I will also record this, put it up on the website. Again, it'll be free to my paid subscribers on the website. But for those that aren't, they'll pay another fee, and it'll be higher than what I charge to get in live. Why? I want you to come in. That's where the fun happens. We talk. They typically last about 40 minutes to an hour. They can be 30 minutes if you don't have anything to ask, because it's all based on you, and a lot longer than that if I get carried away. I've never done one on a Sunday, and it could be fun. I'll have a glass of wine and talk to you. In any case, here we go. Just go to my website. Under the word research, it's all explained. I'm Ira. You have a good day. I'll see you tomorrow morning. Take care.